Okay, so I think this is a good time to start with the session. I think nobody else is going to join. So very good afternoon, Mayur. Mayur, are you there? Uh,
Yes.
yes.
I am here. Yeah.
Good afternoon, Mayur.
Good
Uh,
afternoon.
so I don't think anybody else is going to join. So I think only you will be there. So please let me know whether you will be available to respond or not.
I can respond, but like sometimes I would not be able to. But yeah, I would be hearing in the session.
Okay, okay. No, so why I am asking this kind of a question is that because in today's lecture or in triple as a whole, we will be having a lot of discussion points, a lot of interaction points, right?
Mm.
Because it's a theory subject, so I need to understand from you that what you understand about a particular term. Do you need more explanations on it, right? What are the examples that we can think upon it? So all of this thing would be very, very important for us. So that's why I'm asking.
Sure.
Okay, so whenever you're not available to respond, just let me know, or either just let me know on the chat box that you're not available to respond. That's okay. Okay,
Sure.
so now before starting with the session, I would like to understand few points about you. So first of all, your latest qualification, that what is your latest and the highest qualification, because there might be a case where you might have multiple qualifications. So the latest one and the highest qualification. Okay, then why did you choose ACCA and why did you select AAA as an option? So I would love to understand all of this. And where are you from?
Sir, I'm chartered accountant. I've started ACCA last year, and I cleared my SBR paper.
Okay.
And I'm currently working in audit practice. So I thought AAA would add value to my qualification. So I opted for this paper.
That's amazing. That's amazing. And where do you practice?
So I'm working with EY Pune.
Okay, okay, okay. So you are working with EY Pune.
Pune, Pune team, yeah.
Okay, okay. And what is your position there?
Working as an assistant manager.
Assistant manager. That's amazing. That's amazing. Okay. So now I'll give you a brief about myself. I'm a chartered accountant as well. Okay, so I'm a chartered accountant as well. During my articleship, I used to work with EY Pune only. Okay, so I pursued my articleship from EY Pune only, particularly SRBC and Co LLP. Okay, then after qualification, I joined KPMG Bahrain as an assistant manager of audit. And after that, I shifted back to India to pursue teaching and training as a full-time career. I'm also an India Book of Records holder for certain items that I would be telling you during later sessions. Okay, and currently I train students for CA, ACCA, USCMA, and for some certification courses. Okay, so that's about me. I'm from a city called Jabalpur in Madhya Pradesh.
That's very great, sir. Thank
Thank you,
you.
thank you so much. So I think Sunaina is with us. So good afternoon, Sunaina. How are you? I think there's some connection error on our end. Sunaina, can you hear me? Okay, I think she cannot hear me as of now. No worries on that. So today we are going to start with our subject, which is advanced audit and assurance. Okay, so now I'm sure that Mayur, since you are a chartered accountant, you must have got 9 exemptions. Am I right?
Yes.
Yes. So you must have got 9 exemptions, and you have studied audit at two phases of your life. One at CA intermediate level, and second one is at CA final level. Right? When did you qualify CA? Can you tell me, please?
So I qualified in November 20.
November 20. So your knowledge is not very old, right? So you have studied advanced audit and assurance there as well, which is a very good subject. Okay, so how do you like audit? What do you feel about audit? Is it interesting? Is it something to be feared of, or what is your opinion about audit as a subject?
So it is interesting, and we can't score high marks in this, but because the paper is theory, but it is
Okay.
a very interesting subject. Yeah.
Okay, so now I'll tell you one thing, okay, from my personal experience. When you study audit, as of now, you have studied audit majorly for the CA curriculum, and then you have worked practically on it at your journey with EY Pune, right? Now I can tell you one thing, that once you study the triple A syllabus of ACCA curriculum, you'll get to understand that here the question asking pattern is very, very different. You will not be required to mug up a lot of points. The questions are going to be very, very logical. And sometimes there might be a case that even if you don't know a concept, you will be able to answer a question. Okay. And sometimes there might be a case that even if you know all the points that are not applicable to a particular question because it requires your practical assessment. So that is why I am sure that when you study ACCA triple A subject, or when you solve the questions of triple A syllabus, you'll be very, very happy to see that you are not required to mug up a lot of points. So what we will be doing is we will not be solving questions for next 4 to 5 lectures, but once we start solving question from a say fifth lecture, you will be very, very happy to know that you don't need to remember a lot of points. You need to apply the concepts, which while working at a big four firm, it is automatically developed also. So your that knowledge is also going to help you here. When are you planning to appear for your triple A paper?
in December.
In December. So you have sufficient time also available. So that would be amazing. I feel if we talk about the busy season, so I think this would be the best time to opt for the exam, right? Because after September there would be a little off season in October, November, and December.
So actually, I work on a group audit client, so
Okay.
it would be always busy.
Okay, yes, yes, I understand. But after in group audit clients also, I feel after December or from the last 15 days of December,
Ah, yeah,
I
it's less,
think
yeah.
it's more busy, right? So that's a great thing. Okay, now I have also personally worked in group audits, statutory audits, and that's a great thing. Now Anjali has also joined us. So good afternoon, Anjali. How are you? Can you hear me?
Hello, hi, good afternoon.
Good afternoon. Good afternoon. Sunenda, can you hear me now? I don't think so. Okay. So Anjali, I would like to know few things about you first. Okay. We have already have a discussion of Mayur. Now I would like to have a quick discussion of you that what is your latest qualification? What is your highest qualification? Okay. Then where are you from? And why did you choose ACC and why did you choose AAA?
Hey, hi, I'm a chartered accountant and I also completed my master's in commerce
Okay.
and I'm from Rajasthan
Okay.
and currently I'm working in R2R role, so that's why I'm thinking this course will align with my
Okay.
professional work.
Okay.
So that's why I choose to do ACCA.
Okay. And why AAA as a subject?
Triple A because I have audit in my finals and also audit aligns with financial reporting statements. So that's
Okay.
why.
Okay. Have you appeared for any of the ACCA papers?
No,
No. Okay. Okay. Okay, so Mayur has appeared for SBR paper and he has cleared it also. So whenever we require any particular information for the latest exam scenarios, we will be happy to learn it from Mayur. Okay, so now let's quickly start with our advanced audit and assurance syllabus. Okay, now as of now, before starting with the session, I'm sure you must have learned something about audit. You must have researched because it's an optional subject also. So you must have researched something. So what is your understanding about audit as a whole? That is, what is the syllabus of AAA? What is the syllabus of AAA? And are there any different points from CA final syllabus? Anything, Mayur and Anjali? Okay, no worries, no worries, no worries. It's a great thing. Even if you have not researched, that's okay. Okay, Anjali, anything to add here?
no.
Okay, no worries on that. So I'll give you a little brief about what is our double A syllabus as well as triple A syllabus. That is why I've written here audit and assurance as well as advanced audit and assurance, right? Because in the first lecture, I'm going to give you a brief about what is the syllabus all about, and we will be knowing about certain technical jargons that we use in triple A and double A syllabus. Okay, so number one is introduction to auditing. There we discuss about the definition of audit. We discuss about what is the audit process. We discuss about why audit is required. We discuss about who are the stakeholders. Okay, so let's quickly understand few terms. How do we define audit? How do we define audit? If we have to define, okay, not explain. If we have to define audit, how will we define? Please tell me certain set of words through which you can define audit.
So I remember the definition audit is an independent examination of the financial
Okay.
statement.
Yeah, that's a great thing, right? That is the definition that we remember. See,
Yeah,
that is, it is an independent examination of financial statement with the purpose of expressing an opinion, right?
opinion.
Although we are not required to learn it as of now, but it's good that if you know it. Anjali, please let me know, will you be available to respond during the session or not?
Yeah, actually, I may not be available. Someone is there at my home, so
Okay, no one, no worries, no worries. Okay, so now the second chapter of a double A syllabus is rules and regulations. Here we discuss about the Companies Act that is applicable. Here we discuss about various rules and regulation. We learn about IFAC here. We learn about ISBA here. So we learn about various rules and regulation, various regulatory authorities. Anybody who knows that which Companies Act is applicable for a triple A syllabus? If we have to refer Companies Act anywhere, then which Companies Act will we refer? Anybody? If we have to refer any Companies Act, which Companies Act we will refer? Even if you don't know, please feel free to tell me. No worries on that.
Maybe international one, UK or something.
UK one, right? Not international one, UK one.
Okay. Okay.
Okay. Yeah. Companies Law 2006 is there. Okay. So we have to refer that. In UK, there's Companies Law 2006. We have to refer that. So whenever you will see a reference of Companies Act, you will see UK Companies Act, which is 2006. Okay. What is IFAC? Anybody? IFAC, ISBA, IASB, anything?
Um, IASB is International Accounting Standard Board.
IASB, International Accounting and Auditing Standards Board. Yes, great. ISBA, IESBA, ISBA, International Ethical Standard Board for Accountants, right? And the institution which has created both these boards is called as IFAC. Okay, International Financial Accounting Council. Okay. Now, Now, the third one is governance. Here we learn about corporate governance. Okay. Although you have got exemption for double A syllabus, but it's very important to know about the basics of it. That's why I'm just checking it out. Okay. Anjali, in the meantime, whenever you are available, please let me know. Then when did you qualify your CA examinations? Okay. Please let me know that. Okay. Now, governance. What is governance? Anybody? What is governance? Corporate governance. This is talking about corporate governance. How do we define corporate governance? How do we define corporate governance? There was a chapter in a CA final audit also. Governance. So how do we define corporate governance? Anybody? How do we define corporate governance? Okay, no worries. Corporate governance is the system by which an entity is directed and controlled, right? That's how we used to define it, corporate governance. Then when I talk about ethics, so what are ethics? There are five fundamental principles of ethics, right? Five fundamental principles of ethics. Anybody who knows it? Five fundamental principles of ethics. We used to remember it in CA intermediate audit.
Integrity, objectivity, professional competence and due care, professional behavior.
Okay, but these are only four. Fifth one, integrity, objectivity, right? Second one was objectivity,
Objectivity,
right? That's very important. But it is
confidentiality.
yes, it is on a similar basis applicable over the ethics part of ACCA syllabus also. So because our ethics in chartered accountancy syllabus also is derived from the international ethics only. So the fundamental principles are same. There were five threads also, right? There were five threads also.
Familiarity, self-review thread.
Yes, familiarity, self-review, self-interest threat,
Interest.
right? Advocacy threat,
Hmm.
and intimidation threat, right? These
Int-
are the five threats that we used to remember. So in sequence, we used to remember it as self-interest threat, then self-review threat, then familiarity threat, then advocacy threat, and finally intimidation threat, right? Then there is client acceptance by auditor and audit firm or audit firm. Now that is very, very important, that how do we accept the client? Mayur, you work at EY, so you must be knowing that, there's a form that is prepared and there's a whole sequence of accepting a client, which is usually done by various people, including interns, assistant managers, right? So client
Yes.
acceptance is very, very important, because background check happens. We check the business transactions. We check other transactions also. Okay, so that is very, very important. Okay, now when we talk about the next part, which is risk. Now this is very, very important. Whenever we discuss about risk, this is very, very important. How do we define risk, and what is the role of risk in audit? First of all, how do we define risk? First of all, how do we define risk? Yes, how do we define risk? Anybody? Yes, please tell me.
So in audit, there are various risks like inherent risk, detection risk.
Okay, yes. But that is a different thing. When
Yeah.
when I say risk here means exposure that something could go wrong, right?
Yeah.
Yes, that is how we can define risk. Now, the role of risk in audit is that we have to conduct, as of now, you must be knowing that as of now, we conduct risk-based audit, right? It's not ad hoc audit. We conduct
Yes.
risk-based audit. We first of all assess the risk, okay, that what all kind of risk are there, what items are more susceptible to risk. Say, for example, revenue risk. It's a highly risky item. So we usually conduct audit of revenue at first, right? Then we go for other items, because as of now, as per the standards, we have to conduct a risk-based audit. And when I say risk-based audit, this means that we have to conduct audit based on the risk evaluation of a particular item. Then audit planning. This is very, very important. Here we discuss about uh, that when we will be commencing the audit, okay, who will be part of the audit, what would be the direction, supervision, and review that would be provided, right? Then what would be the final report? What would be the final reporting format? Who will be preparing the report? Who will be ultimately responsible? What are the timelines? What are the scope of the audit? What will be the communication timelines? Everything we discuss in detail under audit planning. But here we discuss about two documents. One is audit planning document. Another one is audit strategy document. Right? Which one is broader? Which one is broader? Audit planning or audit strategy? Which one is broader? Which
Audit
one?
planning.
Audit planning. Okay. I'll say audit strategy, because whenever we are talking about the broader terms, so audit strategy is a document which defines only the scope of the audit and when will the audit be completing and what would the report and all. Audit strategy, as in it discusses the overall terms. It gives us the helicopter view of the overall audit engagement. Okay, but when we talk about the audit planning document, is very detailed. Who will be the part of the audit team, who will be the reviewer, who will be the supervisor, who would be the executor of the audit, when would be the engagement quality review would be conducted, right, who will be the engagement quality reviewer, everything, every time and every communication would be mentioned as audit planning. And that is why I say whenever it is asked that what is a more broader item, so audit strategy is a more broader item than audit planning. Okay. Then second, next point is audit evidence. When I say audit evidence, so audit evidence is the item which is used to frame a conclusion for the auditor's report. But if I have to talk to you about the types of audit evidences, so can you tell me what are certain types of audit evidences? Certain types of audit evidences. There are four. Okay, I can tell you one. Persuasive audit evidence. Just to give you a hint, persuasive audit evidence is one. Persuasive audit evidence is one. Do you know about others? Even if you don't know, please feel free to tell me. No worries on that. Yes, please tell me what are certain types of audit evidences. Mayur, are you there? Okay, no worries. So there are four types of audit evidences. One is persuasive audit evidence. Second is conclusive audit evidence. Third is corroborative audit evidence. And fourth is contradictory audit evidence. Persuasive, which tells us that this might be a true fact, right? Something that might be true. It gives us it is given by persuasive audit evidence. When I say conclusive audit evidence, only this is truth. So for example, if I have gotten an information that bank statement is matching with the closing bank balance, so that is a persuasive audit evidence that bank balances might be true. But if I receive the bank confirmation also, that is a conclusive audit evidence. Then corroborative, when I say corroborative, that is an additional evidence to an existing evidence, right? That is very important here. And then fourth one is contradictory, when two informations are not matching with each other. So Nana, are you saying something? Okay, you unmuted yourself. Now, systems and controls. So here we discussed about information systems, what are internal controls, right? How internal control is there, risk register, risk matrices, everything we discussed, we will be discussing here. And then internal audit. Okay, this is part of double A syllabus, so it's not subject to a discussion. Only thing is I'm giving you a brief about what is double A syllabus. Although you all have claimed exemptions on this, but it's very important to know about it. Then internal audit. Internal audit is another branch of auditing where the auditor usually evaluates the efficiency of the internal controls, prepares a report, and gives suggestion for improvement also. The major differences between internal and external audit are that the report of the external audit is submitted to the shareholders, whereas the report of the internal auditor is submitted to the management. Okay. External audit is driven by rules and regulations, statutory rules and regulations, whereas when we talk about internal audit, so the scope is majorly defined by the management only or the appointer only. Then When we talk about the external audit report, it is usually a public document, whereas when we talk about internal audit, it is usually subject to be used by the management only or the receiver of the report only. Okay. Then suggestion of improvement is not a major point of external audit, whereas in case of internal audit, it is a major point of movement. Now, procedures. When I talk about procedures, so there are certain audit procedures that are there. Particularly, you can remember it by the acronym ICAI ORR. One is inspection, I, inspection, C, confirmation, A, analytical procedure, I, inspection, O, observation, R, recalculation, and again R, reperformance. Inquiry procedure, when you ask something and you obtain the information from them. Okay, that is inquiry procedure. Then there is confirmation procedure, C, confirmation. When I say confirmation, confirmation means that you have obtained an independent document from somebody stating that what you are asking is true. That is confirmation procedure. Please give me a second. Okay, yes. So procedures, confirmation. When you obtain a document from somebody else confirming the fact, then in article procedure, when you set an expectation based on your analysis or uh, the relationship between financial and non-financial items, and then you frame an expectation, then you compare it with the actual and identify reasons for variances. That is analytical procedure. Then again, I inspection. When you yourself verify, say sample testing is part of inspection. Oh, observation. Inventory count is the beautiful example of observation, where the work is performed by the management only, where the work is performed by the management only. You just observe. Okay. Then recalculation, which is the depreciation recalculation, is the most beautiful example of it. That we can recalculate the depreciation, then we compare it with the actual. That is recalculation. Then reperformance, sometimes you are required to reperform. Okay. Now reporting part. Now reporting, sorry, completion review part. Completion, under completion, we summarize all the pointers that are there. We summarize all the pointers. We prepare summary of review memorandum. We check whether there is any change to the audit methodology, whether there is any change to the materiality. Right, all of these points are covered under completion and review. Okay, and then finally reporting, where the auditor prepares the report. There's lagging, there's the video is lagging, I feel. And finally reporting, where we issue an opinion and a report. There we will be learning about various types of opinion, which is adverse opinion, qualified opinion, disclaimer of opinion, unmodified opinion, right? We will be discussing about each one of them. Then when I come to the triple S reverse, so Mayur, are you there or not? Please let me know once.
Hello, hello. Yes, yes, I am here now. Yeah.
Okay, okay. So because you were not there, so I explained a lot of items which were very very important for our understanding. I'll just tell all of you one thing, that if you want to be present, please be fully present. Otherwise it becomes very difficult for me, because when we will be discussing about the technical topics, then it will be very difficult for me to explain again what we have covered already. Okay, so if there is attendance, please fully attend it, so that we are able to understand everything in proper way. Otherwise there would be difficulty in resolving the queries as well. Then I would be requesting you that you watch all the recorded lectures first, and then we will be discussing about it, right? So if you are present, be fully present. If not, then you have a responsibility to watch the recorded lectures before solving any of the questions, and before asking any of the queries in the following lectures also. Okay, I understand. No worries. Okay, now thank you so much, Mayur. Thank you so much. Okay, now when we talk about the regulatory environment, today's session will do, because it's an introductory session only. Only thing is, from later sessions, please make sure that you are available, so that we frame a proper understanding. Okay. Okay. Now when we talk about the triple A syllabus, so that was double A syllabus. Now when we enter into the triple A syllabus, so it is divided into multiple parts. First part is regulatory environment. Second part is professional and ethical consideration. Third part is quality control and practice management. Then next part is planning and conducting an audit of historical financial information. Then completion, review and reporting is there. Finally, other assignments, and then current issues and developments are there. Okay. So when I say regulatory environment, there are three chapters under it. Number one is international regulatory frameworks for audit and assurance services. Here we will be learning about the similar points that we have studied in law and regulations of a double A syllabus, but in a little more detail. So here we will be learning about IFAC, we will be learning about Companies Act, we will be learning about ISBA, we will be learning about IAASB. That is going to be our whole syllabus for regulatory environment. Then when I talk about the money laundering part, then when I talk about the money laundering part, so the second pointer is, here we will be learning about what is money laundering, which offenses considered are as money laundering offenses, what are the stages of money laundering, okay, how money laundering happens, what are our responsibilities as an auditor towards money laundering or stopping money laundering. Then laws and regulations. Here again we will be discussing about certain pointers of the Companies Act only. Then professional and ethical consideration. Here we would be learning about code of ethics for professional accountants. When I say code of ethics for professional accountants, here it's a big point, because here we will be learning in detail about here we will be learning in detail about five fundamental principles, then five ethical threats as well. Then we will be learning about fraud and error. What is fraud? What is error? We will be learning in detail about both fraud as well as error. Then professional responsibilities and liability. Professional responsibilities and liability. Now this is very very important. Professional responsibilities and liability. Then quality control and practice management. Quality control and practice management. So one is quality control. How do we maintain quality? So here we will be learning about ISQM 1, ISQM 2. Under professional responsibility and liability, we will be learning about indemnity insurance and everything. Then practice management, how do we maintain our practice? Then planning and conducting an audit of historical financial information. What is historical financial information? Information which is derived from uh, time, right? By time. Now planning materiality and assessing the risk of misstatement. Planning materiality and assessing the risk of misstatements. That is planning materiality and assessing the risk of misstatements. So here we will be learning about the planning procedure. We will be learning about how do we determine materiality, how do we use materiality in an audit of financial statements. We will be learning about how do we assess the risk of material misstatements. Then audit evidence and audit procedure. When I say audit evidence and audit procedure, that is very very important, because under audit evidences we will be learning about what are the sources of audit evidences, how do we obtain audit evidences in the similar manner that we have studied in double A syllabus, but in a little more detail. Then when I talk about audit procedures, here we will be learning about same ICAI ORR, but in a lot more detail. Then using the work of others. Now when I say others, it could include management expert, it could include auditors experts, and we have to use their work for certain items. For example, say gratuity, we have to take help of the management experts in the form of actuary. For certain items, for example, audit of IT systems, we have to take help of our internal experts, which are in the form of engineers, right? Or CISA people, CISA and DISA people, right? So that is very, very important. So using the work of others. Then group audits. Group audits as in when you perform the audit of the parent company, right? Sometimes parent company is in India, sometimes parent company is abroad. But the main point here is that you are performing audit of the parent company. So now you have to do the standalone as well as consolidated. And when you do the consolidated, you have to review the report of various component auditors as well. So there are multiple considerations regarding that. Then completion, review, and reporting. So subsequent events. That is very, very important, that how subsequent, that what are subsequent events. Under this, we will be having existing events as well as non-existing events. And then we will be moving towards the going concern. What is going concern? So subsequent events are events that happened after the completion of the reporting period or after the reporting period to the date of signing of audit report. In case of going concern, we say that whether entity would be able to continue for foreseeable future or not. Now, please remember, it is foreseeable future, not forever, not any other word. It's foreseeable future. That is up to when we can evaluate as of now. Then completion and review, similar point what we have studied in AA, and reporting, similar point what we have discussed in AA. But here now there would be more assignments. There would be more information about. There would be more chapters on various assignments like audit related and assurance services. That is a very big branch. Then review of interim financial information. What is interim financial information? Any information which is below 12 months period is called as interim financial information. So if the financial statements are being prepared for say 11 months out of total 12 months in the current year, then it is called as interim financial information. See, if it is prepared for say 1 month interim, 2 month interim, 3 month interim. Then prospective financial information, which is prepared for future period based on current estimates. Then due diligence, that is a very important part where we discuss about evaluating a subject matter against a particular criteria. Then forensic audits is there. Then forensic audits is there. Forensic audit means audit which is acceptable in a court of law, or audit report which is acceptable in a court of law, or which is being performed for proper functioning of the laws and regulations. Now, audit of social, environmental, and integrated reporting. Audit of social, environmental, and integrated reporting. Audit of social, environmental, and integrated reporting. That is there. So here we will be learning about social audits, environmental audits. Integrated reporting means we will be learning about six capitals and all. Then current issues and development. Here we will be learning about what are the current issues which are affecting the audit profession as a whole, and we will be learning in detail about it. There could be asked in examinations. Then professional skills. We will be having a quick discussion about it. Okay, so whenever we talk about the professional skill part, okay, what happens is whenever you discuss about the professional skill parts, so you have to uh, demonstrate certain items in your answers, not specifically, but you have to frame your answers in such a way that it demonstrates these four skills, these skills. Okay, so number 1 is analysis and evaluation, right? Professional skepticism, communication, and business acumen. These skills should be demonstrated in your answer. When I say communication, your answer should be clearly articulated. Okay. When I say business acumen, so your solutions or your answer should make business sense also. It should not be vague or absurd, right? Then when I say analysis and evaluation, so you should critically evaluate all the information that is given. You should analyze all the facts that are given, right? So that is very, very important here. When I say professional skepticism, so you should ask the right questions. You should highlight the critical points. You should highlight the right questions, and then you should try to answer them. So you should try to demonstrate these skills. Now, as of now, what we have covered is we have covered the index part of AA, we have covered the index part of AAA, and now we are going for the third part, which is format of the examination. Now that is very, very important. When I say format of the examination, it is very, very important. Okay, so when I say question 1, so question type is there, case study. So it's a 50 marks question. Total paper is of 100 marks. Okay, you are given 3 hour 15 minutes. Uh, total paper is of 100 marks, divided into three questions. First question is of 50 marks, which is section A. Then section B includes two questions, 2 and 3, question number 2 and 3. Both are short scenario questions of 25 marks each. Okay. In this question 1, question type is case study, marks is 50 marks, and it includes 10 professional marks. That is for those four skills you have to write, or you have to mention those four professional skills, include your those professional skills in your answers, and you'll get 10 marks. If you don't, you will not get marks. Okay. Generally, the topics from which question number 1 is asked is planning stage of the audit. It could be a single company for a group of companies. Then question number 2 and 3, these are short scenarios of 25 marks each. Both these 25 marks each includes 5 professional marks. So total 20 professional marks are there out of 100 marks paper. Expected topics, one will always predominantly come from syllabus section E, and others can be drawn from the remaining section. Then other points, quality management and ethics could be asked in any section. Current issues unlikely to be asked standalone but can be integrated into any of the questions. Okay, now exam success skills. So managing information. Exam time is 3 hours 15 minutes long. No reading time at the start is given. Correct interpretation of the requirements is very, very important. That is why we will be, when we will be solving the question, we will read the requirement first and then we will go for the full question. So firstly read the requirement, then read the rest of the question, then read the requirement again. Then answer planning, bullet pointed list or paragraph answers are there. Then efficient numerical analysis. Explain your workings where relevant, show workings. Effective writing and presentation. Use headings, write your answers in short but full sentences, do your calculation first and explanation later on. And then you have to demonstrate good time management. Okay. Then there is audit process, then types of audit procedure, then certain basic audit terminologies that are there. Okay, now let's have a quick break of 2 minutes and then we will be going for the audit process. Okay, now we are going to learn about planning, execution, and reporting, which is the audit process. So whenever we discuss about the audit process, it is majorly divided into three parts. One is the planning phase of the audit, where we majorly discuss about that what thing needs to be done, how it needs to be done, who will be doing it, how it will be reviewed, and so on. Right? Those things are covered as. There's some power issue that is going on, maybe. Okay, so that is known as the planning stage of the audit. Then when we talk about the execution part, so all the planning points are actually executed here. All the planning points are executed here in a manner that evidences are obtained, and then conclusions are formed for individual items. Then when we talk about the reporting part here, all the execution points are summarized, and then sorry, all the execution points are summarized, and then an opinion is framed here. So planning, execution, and reporting part is there, right? Really sorry. Okay, so planning, execution, and reporting part is here. Then planning, execution, and reporting is explained in a little more detail. So under planning, perform appointment formalities, gather background information, identify and assess risk, and then create audit strategy and audit plan. Then execution, so perform audit procedures, review documentation and processes, test transactions and documentation, and then communicate audit results. So provide draft report for comments, obtain corrective action plan, if any, and distribute final report to the appropriate individual. Now, types of audit procedure, we have already discussed it: inspection, confirmation, analytical procedure, inquiry, observation, recalculation, reperformance. We discussed the acronym ICAI ORR as well. Then basic audit terminologies. Now, this is very, very important, that what are certain basic audit terminologies that is very, very important for us to understand. Okay, so the first terminology is assertions. When I say assertions, so assertions are the criteria against which a subject matter is evaluated. Okay, so what I'll do is I'll try to type certain points here. So when I talk about the assertions, majorly there are following assertions: completeness, accuracy, existence, and occurrence. Okay, then measurement and valuation, then presentation and disclosure, right? Cutoff. Right? So these are the then rights and obligations. So what happens is these are the certain subject matters against which certain criteria against which a subject matter is evaluated. So for example, when I say completeness, so the first criteria against which a subject matter, any subject matter, it could be revenue, it could be fixed asset, it could be anything, is measured is completeness. Completeness is common for both profit and loss items as well as P&L items. Accuracy, whether the transaction is recorded accurately or not, that is accuracy. Then existence and occurrence. So existence word is used for the balance sheet items, occurrence word is used for the P&L items, whether something is actually occurred or not, that is existence and occurrence. Then measurement and valuation. So when I say measurement and valuation, measurement word is generally used for the P&L items, valuation word is generally used for the balance sheet items. So whether the amount that is being recorded is correct or not, that is measurement and valuation. Then presentation and disclosure. When I say presentation and disclosure, so presentation and disclosure means whether item is properly recorded in the books of accounts or not. Then cutoff. When I say cutoff means whether the amount is recorded at the appropriate period or not. And then rights and obligations. So assertions, completeness, accuracy, existence and occurrence, measurement and valuation, presentation, disclosure, cutoff, rights and obligations. Then misstatements. Misstatements is a common word which is used. We generally say risk of material misstatements. So what is misstatement? Misstatements generally means difference between what is and what should be. Difference between what is and what should be is called as misstatements. That is, we sh we should know that what should be reported, what should have been accounted for, disclosed, reported, and what is actually accounted for, disclosed, or reported. If there's a difference between them, then it is called as misstatement. But every misstatement cannot be taken into the auditor's consideration. For example, if something was required to be reported at 99 rupees, but it has actually been recorded at 100 rupees. So there might be a difference of 1 rupees, but it is not material, it is not significant for the auditor. So then we have to evaluate materiality, that whether a misstatement is material or not. How do we determine materiality? M- any item is said to be material if it has the capability of impacting the economic decisions of users of financial statements. Now who are users of financial statements? So stakeholders are users of financial statements. When I say stakeholders, who are the stakeholders? Stakeholders means people who are either interested in the company or are impacted by it, right? That is very, very important. Then audit risk is there. So what it audits, so materiality, impact the economic decisions of users of financial statements. Then audit risk. When I say audit risk, so audit risk that auditor issues inappropriate opinion when financial statements are materially misstated. Now please understand, not the vice versa. That is, risk that auditor issues inappropriate opinion when the financial statements are correct. No, that is not audit risk. Risk that auditor issues appropriate opinion when the financial statements are materially misstated. That is not audit risk. Risk that auditor issues appropriate opinion when the financial statements are uh, correct. That is not audit risk. There's only one thing which is audit risk, which is risk that the auditor issues inappropriate opinion when the financial statements are materially misstated. That is, there was something wrong and they said that it is correct. They have issued inappropriate opinion when something was wrong. So inappropriate opinion here means they have said that it is correct, right? Please remember this. This is very, very important because it is usually asked in the examinations as well. But please understand from one example. Okay. Now consider your life and please tell me, what is a bigger risk? When you thought that somebody is a good person, but you assume them to be bad, or when somebody was actually a bad person and you assume them to be good? I'm sure second one is the uh, bigger risk, right? That somebody was bad, but you have assumed them to be good. So risk that auditor issues inappropriate opinion when financial statements are materially misstated. When they were bad, you have assumed it to be good by issuing an inappropriate opinion. So that is audit risk, right? Then audit evidence we have discussed, its types we have discussed. Then audit report. Audit report is the report which is being created or which is being drafted by the auditor of a particular company. Then true and fair opinion, when unmodified opinion is issued, then it is called as true and fair opinion also. Now let's come to the last portion. Let's come to the last portion of our discussion for audit opinion. So here, when I say audit opinion. So here, it means pervasive and non-pervasive. A risk of material misstatement is present in financial statement. Auditor fails to obtain sufficient and appropriate audit opinion. Please remember these 2 points. And then pervasive and non-pervasive. Pervasive as in universal, right? In general English, we use the word pervasive for universal. Here, we use the word pervasive for impacting the whole financial statement. If something has the capability of impacting the whole financial statement, then we say it is pervasive in nature. If something does not have the capability of impacting the whole financial statement, we call it as not pervasive. Okay, so let's read it. So there could be multiple opinion. One is unmodified opinion, which is true and fair opinion. When everything is correct, the presentation is correct, all the risk are material misstatement does not uh, go above the materiality level and all. But then there is something called as pervasive and not pervasive. So when risk of material misstatement is present in financial statements, auditor will issue adverse opinion if its effects are pervasive. So let me frame it correctly. An auditor will issue an adverse opinion when risk of material misstatement is present in financial statements and the effects of which are pervasive in nature. Okay. Now, adverse means that everything is bad. So risk of material misstatement is present in financial statement, the effects of which are pervasive in nature. So for example, uh, there's a loss by fire which has destroyed inventory, fixed assets, which has made the company incapable of generating revenues, right? Debtors may not be realized because the shipment was not done yet, and things like that. Okay, so now it's very very important to understand that this fire has occurred losses at various places, so it would result into adverse opinion. So then auditor will issue an adverse opinion. Okay, then when I talk about the disclaimer of opinion, so here when auditor is unable to obtain or auditor fails to obtain sufficient and appropriate audit evidences. What is sufficient? Sufficient means quantity. What is appropriate? Appropriate means reliability. So auditor fails to obtain sufficient and appropriate audit evidences. Okay, the possible effects of which are pervasive in nature, not effects, the possible effects. Why possible effects? Because auditor failed to obtain sufficient and appropriate audit evidences. When they have failed to obtain sufficient and appropriate audit evidences, then how they can say whether it would have effect or not? So thereby possible. Okay, so auditor fails to obtain sufficient and appropriate audit evidences, the possible effects of which are pervasive in nature, then it is called as disclaimer of opinion. So an auditor will issue disclaimer of opinion when auditor fails to obtain sufficient and appropriate audit evidences, the possible effects of which are pervasive in nature. And then when I say qualified opinion, so we have to merge both. Okay, so how we will merge it? An auditor will show a qualified opinion when risk of material misstatement is present in financial statements, the effects of which are not pervasive in nature, or because any one condition will do, or auditor fails to obtain sufficient and appropriate audit evidences, the possible effects of which are not pervasive in nature. So we have to merge both by changing the word pervasive to not pervasive, right? That is very very important here. Mayur, are you there as of now? Okay, now we are moving ahead to chapter number 1, Introduction to Auditing of AA, but we are not learning it in full. We are just discussing about some of the key points. That is why I've just kept chapter number 1. So, users of financial statements. Who are the users of financial statements? Stakeholders are the users of financial statements. Stakeholder means anybody who is either interested in the company or are impacted by it. Okay, what are the examples of stakeholders? Investors, shareholders, directors, employees, okay, customers, suppliers, everybody is a stakeholder. Then what is Assurance, these are not shareholder stakeholders. Now, what is assurance? Assurance means an activity of obtaining evidence with the purpose of framing an opinion on it. Objectives of auditor: to obtain reasonable assurance that financial statements are free from material misstatement, whether due to fraud or error. To express an opinion whether financial statements prepared by the management are prepared in all material respects as per the applicable financial reporting framework, and to report on findings to report on findings as per the relevant standards on auditing. So that is objectives of internal audit. So three objectives: to obtain reasonable assurance, to express an opinion, and to report on financial statements. Then types of audit. So there are multiple types of audit. Statutory audit is there, internal audit is there, secretarial audit is there, right? A lot of types of audits are there. Then advantages of audit. So advantages of audit: fair and adequate reporting is there, compliance of laws and regulations is there, less regulatory violations are there, right? Updation of processes if required is there. Now, inherent limitations of audit. So nature of financial reporting is complex. So there's always an inherent limitation that audit or auditor will not be able to identify the right risk because the nature of financial reporting is complex. Then there is time and cost constraints, because you have to complete the audit in particular timeline. You have to complete the audit within certain cost. So that is why that is an inherent limitation again, right? Materiality, we have already discussed the gap. Now expectation gap. What is expectation gap? What we have already discussed materiality. Now expectation gap. What is expectation gap? So expectation gap is very simple. In expectation gap, what we usually do in expectation gap, what we usually do is we say that, whenever there's an accounting or auditing fraud, we say that auditor is responsible for it. But in honest terms, auditor is not responsible for it, right? Because there might be the case that auditor has fulfilled all their responsibilities, was management has done some kind of a fraud which was not subject to be identified by the auditor, or auditor has fulfilled all their responsibilities, they did not identify any adverse point. So that is expectation gap. The gap between what is the auditor's responsibility and what public demands from the auditor. Now, difference between an audit and an investigation: audit is done on a regular basis, investigation is not done on a regular basis. Investigation is driven by certain parameters, certain pointers. Audit is mandatory for every company, right? Audit is done by following certain rules and regulations which are particularly framed for audit. Investigation is done by general criminal or civil law procedures, right? The auditor's report is submitted to the shareholders, whereas an investigation report is submitted to the relevant regulatory authority. So we have completed all this part here. Okay. Now let's take a long break. Okay. After the break, we will come back and we will discuss about the chapter number 1 of our triple A syllabus. So it's 2:18. Let's come back by 2:25. Okay. 2:25. Sorry, it's 2:18. Let's come back by 2:35. Okay, 2:35. Yes, thank you. Okay, so I think I was on mute, so I'll quickly repeat what I've just said. So I was saying that, this is our BPP workbook. This is our BPP course book. Here there are multiple chapters, and here there is essential reading portion as well, which we have to study. Okay, so essential reading portion is the item that you need to read before your examinations, because questions might be framed from here. Okay, in today's lecture, we are going to start with chapter number 1, which is International Regulatory Environments for Audit and Assurance Services. This particular part, we need to study from the is essential reading portion, but in a majority of chapters, there is the there is the common knowledge as well as the essential reading portion as well. Okay, so that is very important here. Learning objectives are there, and then there is a business and exam context at the start of every chapter. So you have to be very particular on that. Okay, now this chapter covers a wide range of regulations that affect the work of audit and assurance professionals. You need to be aware of the international nature of the audit and assurance market and the main issues driving the development of regulatory frameworks. The detailed requirements relating to money laundering are then discussed. You should be prepared to explain the responsibilities of professional accountants in this area and to outline the procedures that audit firms should implement. The final section looks at the auditor's responsibilities in respect of laws and regulations that apply to an audit client. This is a topic that could be built into a that could be built into a practical case study question. The technical content of this part of the syllabus is mainly drawn from your earlier studies. Questions in this exam are unlikely to ask for simple repetition of the knowledge, but they are more likely to require explanation or discussion of the reasons behind the regulations, right? That is very, very important. Then in BPP workbook, you'll always find a chapter overview, and at the end, you will find the chapter summary as well. So chapter overview is there, international regulatory environments for audit and assurance services is there. Okay. So international regulatory environment, money laundering. Under money laundering, we'll discuss about the money laundering offenses, ACCA boards, guidelines, risk-based approach, everything. And then ISA 250 is the consideration of laws and regulations in an audit of financial statements. Now, international regulatory environment. When I say international regulatory environment, so what is there? We have to read it from the essential reading portion. So let's go to the essential reading portion. For first few chapters, we would be learning line by line so that you understand that what kind of content is given, how do we interpret it, how do we read it. Okay, and then from later on chapters, we might not read in full. I will be explaining it to you, and reading would be your responsibility. Okay, once you click here, the section is going to be enlarged. Okay, now essential reading portion. So the legal and professional framework is there. It's a short 5-pager essential reading portion only. So international regulatory environments for audit and assurance services there, the legal and professional framework. So you have studied the regulatory framework in earlier exams, for example, AA or SBR. The following summaries will provide a quick reminder. Note that the UK regulatory framework is shown here as an example. Now the need for laws, regulations, standards and other guidances. What is the need? For the purpose of standardization, for the purpose of reducing corporate frauds, right? So corporate scandals, most prominently that of Enron in the US, which was the very bigger one, right? Due to this, Arthur Anderson firm got vanished, right? We all studied it. So most prominently that of Enron in the US, but more recently the furor surround the collapse of Carillion in the UK have brought the audit profession under close scrutiny from investors, businesses, regulators, and others. There's a trend towards businesses becoming more complex and global, which is also one of the inherent limitations of audit, and firms of accountants have expanded their range of services well beyond traditional assurance and tax advice. This has led to a great deal of re-examination of regulatory standard setting structures, both nationally and internationally in recent years. Laws are, in many respects, a last resort in the task of ensuring that audits are conducted properly and are of high quality. As a generalization, laws tend to be prescriptive, and dissuasive. Laws tend to be prescriptive, as in they are not mandatory, they are prescriptive, that this is how things need to be done. They are external to the auditor, requiring them to act within the letter, although not necessarily the spirit of the law, in order to avoid punishment. Law is a relatively blunt instrument for regulation. Okay, so what happens is, generally laws are framed in such a way that you have to follow what is stated, and you do not need to understand the spirit of the law. Sometimes, a lot of times, what happens is, the letter uh, is saying something is letter, as in the exact sentence, the exact interpretation of the sentence is saying something else. However, the literal meaning should be something else. So that is not there. At the other extreme would be a moral code that is purely internal to the author's self, which the individual would adhere to. Irrespective of external consequences or laws, the audit profession does not attempt to set out such a code, this being the more proper area for broader social, moral, or religious authority. Audit regulations do take the presence of external laws and internal morality as their starting points, but sit somewhere in between these two extremes. International standards are principles based, representing a common set of principles and practices which are more flexible than statutory laws, allowing for an element of ambiguity and judgment on the part of the auditor. At the same time, however, auditing standards are not simply general statements of morality. They contain specific suggestions for the auditor to consider in specific circumstances, which are not legally binding, but which provide a starting point for the auditor in a given situation. Now, overview of the UK regulatory framework. Overview of the UK regulatory framework. So, the EU Eighth Directive on Company Law requires that persons carrying out statutory audits must be approved by the authorities of EU member states, EU as in European Union member states, So company law requires that persons carrying out statutory audits must be approved by the authorities of EU member states. Okay, there has been new delegation here, which is to the recognized supervisory bodies. So the authority to give this approval in the UK is delegated to recognized supervisory bodies. Okay, recognized supervisory bodies definitely includes more than one body. An auditor must be a member of an RSB and be eligible under its own rules. So ACCA is one such RSB, recognized supervisory board. Other one could be ICWA, right? ICWA as in the UK chartered accountant, local chartered accountants. Now, the RSBs are required by the Companies Act to have rules to ensure that persons eligible for appointment as a company auditor are either Companies Act 2006, Companies Act 2006 is applicable in UK. Individuals holding an appropriate qualification and firms controlled by qualified persons, that should be there. But we will be learning about much more details in the later part of syllabus. Now, the Financial Reporting Council, FRC, it is commonly called as FRC also, Financial Reporting Council. So the Financial Reporting Council, FRC, is the UK's independent regulator, okay, for corporate reporting and governance, and is governed by the board, FRC board, okay. The governance committees are, there are multiple committees. So number one is people committee, other one is audit and risk committee, third one is conduct committee, fourth one is supervision committee, and fifth one is regulatory standards and courts committee. You'll feel that it's a lot of theory, but it's just for chapter number one. From chapter number two, that is money laundering, everything is very, very technical, and that is why I'm reading every single point that is mentioned over here, just to have a proper understanding of it. I would i would strongly recommend that after the class you should read it once more in complete silence. So people committee responsible for remuneration, succession planning, that who will be promoted, who will be given the controlling points and all, and talent management. So hiring, training, exiting, right? Then audit and risk committee. So responsible for assurance of audit and risk control functions. The regulatory committees are conduct committee. Okay, one is governance committee, people committee, and audit and risk committee. Then there are regulatory committees, which includes conduct committee, supervision committee, and regulatory standards and codes committee. So conduct committee responsible for inquiries, investigation, and enforcement functions. Supervision committee responsible for supervisory and monitoring functions. Regulatory standards and codes committee responsible for regulatory standards and codes functions. The regulatory committees are supported by the senior advisors. An executive committee looks after the day-to-day management of the FRC, including resources, policies, and programs. There's a non-executive advisory panel of subject specialists who can be called upon by the executive and other committees as required. There are also two arm length panels that the FRC uses. So tribunal panel is there, enforcement committee panel is there. Okay, so there are two arm length panels. Now, the role of the FRC board is to set high standards of corporate governance through the UK Corporate Governance Code, to set standards for corporate reporting and actuarial practice. So these are the role to set high standards for corporate governance. Okay, to set a standard for corporate reporting and actuarial practice. Actuary, as in which deal in the complex calculations, a statistical calculation like gratuity, insurance payments and all. To monitor and enforce accounting and auditing standards, not just monitor but enforce also. That is, if it is not being followed, then giving direction on how to follow it, take corrective actions also. To oversee regulatory activities of the actuarial profession and professional accountancy bodies. To operate independent disciplinary arrangements for public interest cases. Now note, at the time of writing, the FRC is in the process of being replaced by the Audit, Reporting and Governance Authority, ARGA, which is discussed in more detail in the essential reading for chapter number 16. Now, uh, I think full form that I said for IFAC was wrong. I think that time, by mistake, I said, I think, International Financial Accounting Council. No, it's not International Federation of Accountants. It's International Federation of Accountants. Okay. So now international standards on auditing are produced by the International Auditing and Assurance Standards Board, which is IAASB, or technical standing committees of the International Federation Accountants, IFAC. Now, you should also be familiar with the International Standards Ethics Standard Board for Accounting, which is ISBA, another body of IFAC and the producer of the Code of Ethics. Now, IFAC, International Federation of Accountants, then IAASB, International Auditing and Assurance Standards Board, Okay, and then ISBA. IASB is responsible to create what? ISAs, International Standards on Auditing. Are they covered in our syllabus? Yes. ISQMs, International Standards on Quality Management. ISREs, International Standards on Review Engagements. Yes, that is also covered. Then ISAE, International Standards on Assurance Engagement. We'll get to know about it. There's just one or two. Then ISRS, International Standards on Related Services. We'll get to know about it. Then ISBA, International Ethics Standard for Accountants. That is a separate chapter, chapter number 4 in our syllabus, Code of Ethics for Professional Accountants. Now, the IAASB's preface to International Standards on Quality Management, Auditing, Assurance and Related Services pronouncement states that all the IAASB's engagement standards above are authoritative material, which means that they must be followed in an audit that is conducted in accordance with ISAs. The IAASB also publishes four kinds of non-authoritative material. Number one, International Auditing Practice Note IAPNs. These do not impose additional requirements on auditors but provide them with practical assistance. Practice notes relating to other international standards, example in relation to ISREs, ISAEs, or ISRS. Staff publication which are used to help raise awareness of new or emerging issues and to direct attention to the relevant parts of the IASB pronouncements, and then consultation paper which seeks to generate discussion with stakeholders. Okay, so these are international auditing practice note. These are non-authoritative. That is, these are in the form of guidances. International auditing practicing notes. Then practice notes relating to other international standards, not particularly related to auditing, but related to ISRS, ISAs. Then staff publications, which are used to help awareness of new and emerging issues. From there, we take inspiration for our current issues as well. Then consultation papers, where we discuss with the stakeholders about the impact of certain items. So within each country, local regulations govern to a greater or lesser degree the practices are followed in the auditing or financial or other information. Such a regulation may be either of a statutory nature or in the form of statements issued by the regulatory or professional bodies in the countries concerned. Now, national standards on auditing and related services published in many countries differ in form and content. The IAASB takes account of such documents and differences, and in the light of such knowledge issues ISAs which are intended for international acceptance. The European Union, for example, has since 2014 required ISAs as issued by the IASB to be adopted at EU level. Member states may impose additional requirements on auditors, but these must not contradict EU ISAs. An example of this is the UK FRCs, whose ISA UK are in some place more stringent than IASB ISS. So UK ISAs are more stringent than international ISAs. Now, public oversight internationally. Public oversight as in whether public interests are being met or not. So the Public Interest Oversight Board, PIOB, exists to oversee all of IFAC's public interest activities, including its standard setting bodies such as the IAASB and ISBA. Its work its work involves: number one, monitoring the standard setting boards. Number two, overseeing the nomination process for membership of these boards. Number three, cooperation with national oversight authorities. So monitoring the standard setting boards, overseeing the nomination process for membership of these boards, cooperation with national oversight authorities. Now, the objective of the international PIOB is to increase the confidence of investors and others that the public interest activities of IFAC are properly responsive to the public interest. The PIOB is based in Madrid, Spain, where it operates as a non-profit Spanish foundation. Oversight within the EU is by the Committee of European Auditing Oversight Bodies, CEAOB, which was set up in June 2016 as a result of the EU audit regulation. The CEAOB acts as the framework for cooperation between European national audit authorities. The CEAOB is made up of representatives of the national audit oversight bodies across the EU, representatives from national audit authorities of the European Economic Area. Additionally, the European Banking Authority (EBA) and the European Insurance and Occupational Pensions Authority (EIOPA) attend as observers. Now, other examples of public oversight. So, an example of public oversight is the professional oversight team of the UK's FRC, formerly the Professional Oversight Board or POB. which has a number of statutory responsibilities. These include independent oversight of the regulation of statutory auditors by the IRSBs, independent supervision of auditors general in respect of the exercise of their function as statutory auditors, the receipt of statutory change of auditor notifications from companies and statutory auditors in respect of major audits. Okay. So the example of public oversight includes independent oversight of the regulation of statutory auditor by the RSBs. Example, ACCA in India, ICI does that. Independent supervision of auditors general in respect of the exercise of their function as statutory auditors that are generally done by disciplinary committees of various countries. The receipt of statutory change of auditors notifications from companies and statutory auditors in respect of major audits. Now, in the US, the response to the breakdown of stock market trust caused by perceived inadequacies in corporate governance arrangements and the Enron scandal was the Sarbanes-Oxley Act 2002. The act applies to all companies that are required to file periodic reports with the Securities and Exchange Commission. Now, the Public Company Accounting Oversight Board (PCAOB) is a private sector body in the USA created by Sarbanes-Oxley. Its aim is to oversee the auditor of public companies. Its stated purpose is to protect the interest of investors and further the public interest in the preparation of informative, accurate, and independent auditors report (PCAOB 2016). Its powers include setting auditing, quality management, ethics, independence, and other standards relating to the preparation of auditors' reports by issuers. It also has the authority to regulate the non-audit services that audit firms can offer. Sarbanes-Oxley has been criticized in some quarters for not being strong enough on certain issues. For example, the selection of external auditors by the audit committee, and at the same time being over rigid on others. Directors may be less likely to consult lawyers in the first place if they believe that legislation could override lawyer-client privilege. In addition, it has been alleged that a Sarbanes-Oxley compliance industry has sprung up, focusing companies' attention on complying with all aspects of the legislation, irrespective of how significant they may be. This has distracted companies from improving information flows to the market and then allowing the market to make well informed decisions. The Act has also done little to address the temptation provided by generous stock options to inflate profits, other than requiring possible forfeiture if financial statements are subsequently restated. Most significantly, all of these are very simple, that is why I'm not explaining it. Most significantly, perhaps, there's some evidence of companies having turned away from the US stock markets and towards other markets, such as London. It was said that this was partly due to companies tiring of the increased compliance cost associated with Sarbanes-Oxley implementation. In addition, the nature of the regulatory regime may be an increasingly significant factor in listing decisions. Now, corporate governance and audit committees. So, general requirements of codes of corporate governance. So, corporate governance is the system by which companies are directed and controlled. Like we have discussed, corporate governance is the system by which an entity is directed and controlled. Good corporate governance is important because the owners of a company and the people who manage the company are not always the same. There might be differences in promoters, there might be differences in owners as well as the managers. We generally tend to think that directors are the owners of the company, but usually they are not. Directors are just the management people. So they might be same as owners, they might be different as owners, right? Different than owners. Now, the G20 or OECD principles of corporate governance set out the rights of shareholders, the importance of disclosure and transparency, and the responsibilities of the board of directors. You'll have already studied various forms of governance as part of your earlier studies. The way it is done in the UK is shown next as an illustration. UK Corporate Governance Code. So the FRC's UK Corporate Governance Code sets out standards of good practice using the following categories: board leadership and company purpose, division of responsibilities, composition, succession and evaluation, audit, risk and internal control, and remuneration. So you can download the most recent version of the code by visiting relevant websites. Now, FRC guide on audit committees. So what are audit committees? Audit committees are framed. We will be learning about it under corporate governance chapter, but audit committees are framed by independent directors only. So usually there are minimum number of directors. All of them are independent directors. One should be financial expert. And audit committee, their job includes recommending the appointment of auditor, recommending or appointment of auditor, reviewing the auditor's report, right? Checking the internal control system within the organization. That is very, very important. So the FRC issued its guidance on audit committees in September 2012, which aims to help companies to implement the requirements of the UK Corporate Governance Code. The guidance was revised in 2016, FRC 2016. The particular arrangements for an audit committee should be tailored to the circumstances of the company. Audit committees need to be proportionate to the size, complexity, and risk profile of the company. The guidance should not be taken as a simple list of rules. Rather, it notes that in respect of the relationship between the audit committee and the board, the most important features of this relationship cannot be drafted as guidance or put into a code of practice. They pertain to human relationships, not rules. The relationship should be frank and open, and it should be possible for disagreement between the audit committee and the board to be robust and based on information made freely available to the audit committee. Now, establishment of the audit committee. Now, establishment of the audit committee. So, as noted above, there should be three independent non-executive directors on the committee. As noted above, there should be three independent non-executive directors on the committee. Three independent non-executive directors on the committee. Two in the case of smaller companies. At least one member should have recent and relevant financial experience and a relevant professional accountancy qualification like CA, ACCA. Also, the audit committee as a whole should have competence relevant to the sector in which the company operates. Let's read it again. It's a very important point. As noted above, there should be three independent non-executive directors. So independent directors are must on the committee. Two, in the case of smaller companies, at least one member should have recent and relevant financial experience and a professional accountancy qualification. The audit committee as a whole should have competence relevant to the sector in which the company operates. Appointments are recommended by the nomination committee. There should be a minimum of 3 meetings per year, but the precise number depends on the circumstances. No one who is not on the committee has a right to attend meetings, but they may be there if invited. The committee should meet external auditors at least annually. The committee should have sufficient resources to undertake its duties, including remuneration for its members. Now, relationship with the board. So, the board decides the role of the audit committee, and it is to the board that the audit committee reports. The audit committee should report to the board on how it has discharged its responsibilities. If the committee disagrees with the board, then it should be able to report its point of view to shareholders. Now, roles and responsibilities. Annual report. The audit committee reviews significant issues and judgments in financial reporting. Management is responsible for preparing the financial statements. The audit committee then reviews them, taking into account the external auditor's point of view. Internal controls and risk management systems. These systems are management's responsibility, but the audit committee reviews them and approves a statement made about them in the annual report. Then internal audit. Okay, so annual report is very, very important. Significant issues and judgments are there. Audit committee reviews significant issues and judgments in financial reporting. Okay, management prepares the annual report, but audit committee reviews it. Internal controls and management. So these systems are management responsibility, but the audit committee reviews them and approves the statement made about them in the annual report. That what is the role of the auditor or audit committee? Okay, then internal audit. So the audit committee reviews the effectiveness of the internal audit function, including assessing whether one is needed if it is not already present. In its review of the work of the internal audit function, the audit committee should: number one, ensure that the internal auditor has direct access to the board chair and to the audit committee and is accountable to the audit committee. Then review and assess the annual internal audit work plan. Then receive a report on the results of the internal auditor's work on a periodic basis. Review and monitor management's responsiveness to the internal auditor's findings and recommendations. Meet with the head of internal audit at least once a year without the presence of management. Head of internal audit, okay, without the presence of management. And monitor and assess the role and effectiveness of the internal audit function in the overall context of the company's risk management system. Let's read their role again. So in its review of the work of the internal audit function, the audit committee should: number one, ensure that the internal auditor has direct access to the board chair and to the audit committee and is accountable to the audit committee. That is, they have direct access. There is no reporting line yet. There are no long reporting lines due to which decision making or information communication would be delayed. Review and assess the annual internal audit work plan. Then receive a report on the results of the internal auditor's work on a periodic basis. Then review and monitor management responsive to the internal auditor's findings and recommendations. Then meet with the head of internal audit at least once a year without the presence of management. Then monitor and assess the role and effectiveness of the internal audit function in the overall context of the company's risk management systems. Now, role and responsibilities in relation to external auditor. Roles and responsibilities in relation to external auditor. This is very important. After this, communication with shareholders is there. Then attributes of a high quality auditor is there. And then we can close a session after advantages and disadvantages of audit committee. So roles and responsibilities in relation to external auditor. Uh, let's discuss it after the break. Okay, let's take a 10 to 15 minutes break. It's 3:07. Let's come back by 3:20. Okay, thank you. Now, roles and responsibilities in relation to external auditor. Whose roles and responsibilities? Audit committee's roles and responsibilities. Okay. So the audit committee is the body responsible for overseeing the company's relation with the external auditor. Now, relations in the form of appointment as well as management as well as resignation or removal as well. So roles and responsibilities of audit committee towards external auditors. Appointment and tendering. So the audit committee makes a recommendation on the appointment. Makes a recommendation. They do not appoint directly. They make a recommendation. So the audit committee makes a recommendation on the appointment, reappointment, and removal of the external auditors. If this is not accepted, then the annual report must contain a statement explaining the differing opinions of the audit committee and the board. That is, if audit committee has recommended something but board has not accepted it, then annual report should contain that thing also. Now the audit committee assesses the auditor's qualifications, expertise, resources, and independence annually. Is every auditor experienced or expert? No, because they might be expert in some field but they might not be expert in your industry. So that is why it is very, very important. So the committee assesses the auditor's qualification, expertise in your industry, resources, and the independence annually. Listed companies put the auditor out to tender at least every 10 years and rotate after every 20 years. Tender as in they will seek information from other auditors as well. They'll compare what are the market rates, they'll compare what are the market opportunities, and then if they see that the current auditor is fit, then they will reappoint him for another 20 years, but for another 10 years, but they mandatorily have to rotate him after every 20 years. Okay. Now, terms and remuneration. So the audit committee approves the terms of engagement and the remuneration of the external auditors. They have to approve. Okay. Not recommend. Approve the terms of engagement and remuneration. Only appointment is recommended. Rest all things are approved. The audit committee reviews the engagement letter each year. They review the engagement letter. Each term of the engagement letter is reviewed by the audit committee, and scope of the audit, whether any changes are required or not. Now, annual audit cycle. So at the start of each annual audit cycle, the audit committee ensures appropriate plans exist for the audit. The committee considers whether the auditor's overall work plan, including plan levels of materiality and proposed resources, are appropriate or not. The committee discusses with auditor major issues found, key judgments, levels of errors, including uncorrected misstatements. The committee reviews written representations from management, auditor's management letter. The committee reviews the effectiveness of the audit process annually and reports to the board on its findings. Now, independence. The audit committee assesses auditors' independence annually. The committee recommends and develops company's policy on the provision of non-audit services by the auditor. The communication with the stakeholder, communication with shareholders. So the audit committee section of the annual report should include a summary of the role of the audit committee, the names and qualifications of all members of the audit committee during the period, the number of audit committee meetings, the significant issues considered in relation to the financial statement and how these issues were addressed, in an explanation of how it has assessed the effectiveness of the external audit process, and the approach taken to the appointment or reappointment of the external auditor. It must include information on the length of tenure of the current audit firm when a tender was last conducted, together with advanced notice of any tendering plans. The report should also outline any contractual obligations that acted to restrict the audit committee's choice of external auditors. If the external auditor provides non-audit services, how auditor objectivity and independence is safeguarded. Okay, let's read it again and understand it. Communication with shareholders. So the audit committee section of the annual report should include number 1, a summary of the role of the audit committee. That is, what was the role of the audit committee, that should be summarized over there. Okay, because not every shareholder, not every stakeholder must be knowing about it. Then the names and qualifications of all members of the audit committee during the period. Names of the audit committee members, qualification of all members of the audit committee, the number of audit committee meetings, the significant issues considered in relation to the financial statements and how these issues were addressed. So significant issues considered. Then an explanation of how it has assessed the effectiveness of the external audit process and the approach taken to the appointment or reappointment of the external auditor. It must include information on the length of tenure of the current audit firm when a tender was last conducted, together with advance notice of any tendering plans. The report should also outline any contractual obligations that acted to restrict the audit committee's choice of external auditors. If the external auditor provides non-audit services, how auditor objectivity and independence is safeguarded. And FRC, Audit Quality Practice Aid for Audit Committees. So in May 2015, the FRC issued Audit Quality Practice Aid for Audit Committees. The document aimed to provide guidance to audit committees on how to assess the quality of the audit. The original context here was the 2012 revision of the UK Corporate Governance Code, which introduced the requirement for audit committees to report on how they assess the effectiveness of the external audit process. The FRC reissued this guidance in 2019 to take account of subsequent updates to the UK Corporate Governance Code and a number of other developments since the original publication in 2015. All public interest entities PIs must now tender for their external audit every 10 years. External auditors must now also be rotated after a period of 20 years. Tenders must now make high audit quality a central criterion in order to be considered effective, starting with the appointment of an auditor who can operate with sufficient levels of professional skepticism to avoid being unduly influenced by a client's management. Consequently, audit committees must be able to demonstrate a rigorous and transparent tendering process that considers all possible candidates, including those from what are known as challenger firms, that is outside of the big four. There is a perceived increased need for audit quality as a result of events such as the collapse of Carillion in the UK, which has ultimately led to the adoption of new quality management standards since this guidance was published. Audit committees must now report their work in a meaningful and transparent way within the annual report, including how they have assessed the quality of the external audit processes, the independence and effectiveness of the audit, including the provision of non-audit services, and how they have managed the appointment of auditors. The document sets out a framework for evaluating the quality of the audit. The FRC gives us an evaluation pyramid that depicts the aspect of the auditor which the audit committee should focus on: mindset and culture, judgment, quality control, skills and knowledge. So mindset and culture is there, judgment is there, quality control and there, and skills and knowledge are there. Now, attributes of a high quality auditor, attributes of a high quality auditor. So there are majorly four attributes: judgment is there, mindset and culture is there, skills, character, and knowledge should be there, and quality control should be there. Now, under judgment, professional judgment should be on point. So professional judgment is applied at all stages of the planning and performing and evaluating the audited and the audit, reinforced by recent developments to consider the role and mindset expected of professional accountants. This is supported by the three other elements. Now, mindset and culture. Auditor has high professional and ethical principles, in particular integrity and independence, and eschews all personal and commercial interests that would conflict with the responsibilities of their role. Professional skepticism should also be a core principle. This is reflected in the individual auditor's mindset and in the audit firm's culture. Now, skills, character, and knowledge. So, auditors demonstrate strong auditing skills developed through training and experience, effective communication skills, and the strength of character to approach the audit with a high degree of professional skepticism. Necessary personal attributes include rigor, perseverance, and robustness, a sound knowledge of business, its industry, and the environment in which it operates, and understanding of the legal and regulatory frameworks, including professional standards that are relevant to the audit and the financial statements. Then quality control. Effective quality control of an audit engagement involves identifying the risk to audit quality and establishing adequate controls at the engagement level to address these, taking account of controls at the audit firm level, including appropriate software and methodologies. Okay, now let's understand this. Judgment should be on point because it is used at all levels of the audit. Mindset and culture should be professional as well as ethical. So they should keep professional skepticism in their mind. They should follow all the professional and ethical boundaries. Then skills, character, and knowledge. So they should have the relevant professional, ethical, technical skills. They should have strong auditing skills. Their communication skills should be good, should be appropriate, should be effective, and they should be a person of strong character. Then quality control. So effective quality control of an audit engagement involves identifying the risk to audit quality, establishing adequate controls at the engagement level to address these, taking account of controls at the audit firm level, including appropriate software and methodologies. Now, external management auditor and audit committee. Sources of evidence for evaluating the auditor. Sources of evidence for evaluating the auditor. So external parties such as regulators, prudential supervisors, shareholders, and external audit quality inspections such as those carried out by the FRC. Then management. The audit committee's own interactions with management and other employees of the company, such as internal audit, as well as evidence that the auditor has deployed professional skepticism and technical competence. Then auditor. Documentation such as tendering information, the audit plan, recorded audit findings, and the auditor's report. An audit committee and auditor interaction. So the audit committee can obtain relevant support for its assessment of the external audit process through its normal interaction with auditors, such as asking questions, as audit committee members in undertaking its oversight of the financial reporting process, including challenge of management if required. Now, as an example, an audit committee's evaluation of the audit might include the following: hold a discussion with the auditor to brainstorm factors that could affect audit quality, ask the auditor to explain the risk to audit quality that they identified and how they intend to address them, probe and challenge the auditor's strategy and plan in light of the outcome of the audit committee's initial quality discussion. When discussing the auditor's findings, the committee might decide to compare evidence of audit quality at the planning stage with the subsequent outputs of the audit process. The evaluation of the audit quality should consider the contribution of the auditor to the company's financial reporting process and how it is has assessed the matters identified during risk assessment, including those considered key audit matters. The auditor's report will also be reviewed to determine its quality and whether it has gone beyond the baseline of boilerplate reporting. The audit committee can also seek evidence from the auditors themselves to establish their own perception of the audit, including the firm's interaction with the client and whether they feel they have delivered a high quality audit or not. And finally, advantages and disadvantages of audit committee. So there are certain advantages and certain disadvantages of audit committee. Advantages: it provides the auditor with an independent point of reference other than the executive directors of the company in the event of disagreement arising. It will lead to increased confidence in the credibility and objectivity of financial reports. By specializing in the problems of financial reporting and thus, to some extent, fulfilling the director's responsibility in this area, it will allow the executive directors to devote their attention to management. In cases where the interest of the company, the executive directors, and the employees conflict, the audit committee might provide an impartial body for the auditors to consult. Then the internal auditors will be able to report to the audit committee. And then disadvantages: there may be difficulty selecting sufficient non-executive directors with the necessary competence in auditing matters for the committee to be really effective. The establishment of such a formalized reporting procedure may dissuade the auditors from raising matters of judgment and limit them to reporting only on matters of fact. And then cost may be increased that are there. Okay. Now please give me 2 minutes. Okay. Now let's have a quick revision of what we have studied in today's session. Okay, so we initially started with the index of AA, where we studied that what is introduction to auditing. We discussed about rules and regulations. We discussed about governance. We discussed about ethical point of views. We discussed about client acceptance by auditor or audit firm. We discussed about risk. We discussed about audit planning as well. We discussed about audit evidences. We discussed about systems and controls. We discussed about internal audit. We discussed about procedures. We discussed about completion and review. We discussed about reporting. Then AAA, under AAA, we discussed about regulatory environment, which is international regulatory frameworks for audit and assurance services, money laundering laws and regulations. Then we discussed about professional and ethical considerations, so code of ethics for professional accountants, fraud and error, professional responsibilities and liabilities. Quality control and practice management. So quality control, practice management is there. Then planning and conducting an audit of historical financial information. So planning, materiality, and assessing the risk of misstatements, audit evidence, and audit procedures using the work of others and group audits. Then completion, review, and reporting is there. Subsequent events and going concern is there. Completion, review, reporting part is there. Then other assignments. So audit related and assurance services, review of interim financial information, prospective financial information, due diligence, forensic audits, audit of social, environmental, and integrated reporting is there. Then current issues and development. So other current issues and professional skills are there. Then format of the exam, AAA. So question one, question type, case study is there. 50 marks question would be there. Then question number 2 and 3 would be of 25 marks each, and it would be short scenario. In first question of 50 marks, there would be 10 professional marks, and in case of 25 marks question, there would be 5 professional marks. Okay, then we discussed about some key exam success skills. So it would be managing information correctly, correct interpretation of the requirements, answer planning, efficient numerical analysis and show your workings clearly, effective writing and presentation, good time management. Then audit process, so planning, execution, and reporting part is there. Okay, so audit process, planning, execution, communicate, audit results is there. Then types of audit procedures, so inspection is there, confirmation is there, analytical procedures is there, inquiry is there, observation is there, recalculation is there, re-performance is there. Okay, so inspection, confirmation, analytical procedures, inquiry, observation, recalculation, and re-performance is there. You can remember it by ICAI ORR. Then we discussed about multiple basic audit terminologies like assertions. So under assertion, we discussed about completeness, accuracy, existence and occurrence, measurement and valuation, presentation and disclosure, cutoff, rights and obligations. Then we discussed about misstatements. So difference between what is and what should be. Then materiality, impact the economic decisions of users of financial statements. Anything which has the ability to impact the economic decisions of users of financial statement is said to be material. Then audit risk, risk that auditor issues inappropriate opinion when financial statements are materially misstated. Then audit evidence and its types are there. Audit report is there. True and fair opinion is there. Audit evidence and its type, we just discussed. Audit report we discussed, and then there would be some opinions. So we discussed about adverse opinion, qualified opinion, disclaimer of opinion. How we will define adverse opinion? So we will merge these two boxes, which is AA. So we'll say an auditor will issue an adverse opinion when risk of material misstatement is present in financial statements, the effects of which are pervasive in nature. Then, then we'll say for disclaimer of opinion, the auditor will issue disclaimer of opinion when an auditor will issue a disclaimer of opinion when auditor fails to obtain sufficient and appropriate audit evidences, the possible effects of which are pervasive in nature. Then, how will we define qualified report? So we'll say risk of an auditor will issue qualified opinion when risk of material misstatement is present in financial statements, the effects of which are not pervasive in nature, or auditor fails to obtain sufficient and appropriate audit evidences, the possible effects of which are not pervasive in nature. So we'll merge both explanations. Then we discussed about some basic points like who are the users of financial information, what is assurance, what is objectives of auditors, types of audit, advantages of audit, inherent limitations of audit, materiality, expectation gap, difference between an audit and investigation. Then we discussed about chapter number 1. So that is international regulatory framework, which is majorly considered here only. So we discussed about the needs for laws, regulations, standards, and other guidances. We discussed about the overview of the UK regulatory framework. We discussed about the Financial Reporting Council. Under that, we discussed about People Committee, Audit and Risk Committee, Conduct. Then we discussed about so there are two types of committees under Financial Reporting Council. One is Governance Committee, another one is Regulatory Committee. Under Governance Committee, there is People Committee, Audit and Risk Committee. Under Regulatory Committee, there is Conduct Committee, Supervision Committee, and Regulatory Standards and Codes Committee. Then we discussed about the international standard setting body. So we discussed about IFAC, we discussed about IASB, we discussed about ISBA. IFAC is International Federation of Accountants. You should remember this. IASB is International Auditing and Assurance Standard Board. It is not accounting and auditing. It is Auditing and Assurance Standards Board. ISA stands for International Standards on Auditing. ISQM stands for International Standards on Management, Quality Management. All of these are created by IASB. Okay. ISR is International Standards on Review Engagement. ISAE is International Standards on Assurance Engagement. ISRS International Standards on Related Services. Then is International Ethics Standard for board for accountants. So under this, Code of Ethics for Professional Accountants is there. Then we discussed about public oversight internationally. So we discussed about the work in what the work involves. So the work involves monitoring the standard setting bodies, overseeing the nomination process for membership of these boards, and cooperation with national oversight authorities. Then we discussed about corporate governance and audit committees. So corporate governance means system by which an entity is directed and controlled. Major UK corporate governance code majorly includes five components or five categories. One is board leadership and company purpose. Another one is division of responsibilities. Third one is composition, succession, and evaluation. Fourth is audit, risk, and internal control. And fifth is remuneration. Then we discussed about audit committee. So there should be minimum 3 non-executive independent directors. One should have a recent and relevant financial experience. So one should be financial expert. Appointments are done by the nomination committee. Minimum 3 meetings should be there, and they should meet external auditors at least annually. We discussed about relationship with the board also. Then we discussed about roles and responsibilities of audit committee, which majorly includes review of annual report, internal controls and risk management systems, internal audit. Then we discussed about roles and responsibilities in relation to external auditor, roles and responsibilities of audit committee in relation to external auditor. So it is appointment and tendering that they recommend the appointment. Then they put external auditors for tenders every 10 years, and then they rotate them after every 20 years. Then terms of remuneration is approved by the audit committee only. They review the audit report submitted, they review the written representations, they review the auditor's management letter also, they review the engagement letter also, they review the scope of audit also. Then communication with shareholders. So uh, they in annual report, in their relevant section of the annual report, they say what was their responsibility, okay, what is the name and qualification of the members of the audit committee, details about the number of audit committee meetings, significant issues considered, and how it has assessed the effectiveness of the external audit process. That all is given in the annual report, audit committee section of annual report. Then we discussed about attributes of high quality auditor. So it is judgment, mindset and culture, is skills, character and knowledge, and quality controls. So professional judgment should be on point, professional skepticism should be on point, skills, character and knowledge. The auditor should have professional, technical and softer skills. They should be a person of character, and they should have the relevant knowledge as well. And quality control, their focus should be on maintaining the quality in an audit of financial statements. Then sources of evidence for evaluating the auditor. So it could be external sources like regulators, prudential supervisors, shareholders, and external audit quality inspections. It could be through management also, like the audit committee's own interactions with management and for other employees of the company, such as internal audit, as well as evidence that auditor has deployed professional skepticism and technical competence. Then documentation such as tendering information, the audit plan, recorded audit findings and the auditor's report. Then audit committee and auditor interaction. So the audit committee can obtain relevant support for its assessment of the external audit process through its normal interaction with auditors. Then advantages and disadvantages of audit committees. So there are multiple advantages and disadvantages of audit committee, including it provides the advantages include it provides the auditor with an independent point of reference other than the executive directors of the company in the event of disagreement arising. It will lead to increased confidence in the credibility and objectivity of financial reports. Then, by specializing in the problems of financial reporting and thus, to some extent, fulfilling the director's responsibility in this area, it will allow the executive directors to devote their attention to management. Then, in cases where the interest of the company, the executive directors, and the employees conflict, the audit committee might provide an impartial body for the auditors to consult. Then, the internal auditors will be able to report to the audit committee. Now, disadvantages. There may be difficulty selecting sufficient non executive directors with the necessary competence in auditing matters for the committee to be really effective. The establishment of such a formalized reporting procedure may dissuade the auditors from raising matters of judgment and limit them to reporting only on matters of fact, and then cost may be increased. With this, we can close today's session. We'll meet for tomorrow's session, and we will discuss about the money laundering and later chapters. Thank you so much.